Commodities are on the move. Are you tracking the wave or trailing the herd? Welcome to Commodities with Investing Angles, where candles speak loud and Elliott waves point the way. Oil is falling, just as forecasted. Natural gas, rallying right on cue. Silver and gold, prepping for another meltdown, we warned you. And copper might just be the next to melt down. We'll do live technical analysis, uncover the next potential targets, and map the setups for most trader might miss. What's your top commodity play this week? Drop your thoughts in the comments. Smash that like, ring the bell, and share this across your trading circles. Subscribe for sharp, actionable insights before the reversal even forms. Let's get into the charts. And we start with oil. So what we are seeing here is a very strong bearish move. Remember, we were talking about weekly failure for a couple of days already and saying that this move could be a fake out, and it looks like now we are seeing real weekly odds and they are bearish. So far, the daily candle, if it closes like this, it will be a strong bearish reversal on the potential tower top. The same for 2-day frame. If we look at the 3-day frame, well, it's not closing today, but still the candle is substantially bearish. And for the 5-day frame also looks bearish. But the most importantly, I would say that this is the weekly formation. That is a very good chance to form a falling three methods if oil goes a little lower by Friday. Now let's have a look at the chart. So this is the one that we shared yesterday with our subscribers just before the fall, saying that the wave has been completed and there is a good chance that we need to move down. And these were two levels which would indicate the top itself. So this is how oil is falling right now. And if we look at the smaller frame, smaller wave, for example, it is looking like a very clean impulsive wave. So we have an impulse 1, wave 2, and now oil is forming wave 3. We can try to measure it and try to estimate where the next stops would be. So this is wave 3 right now. If we take this possible pattern, so this would be wave 3, probably ends somewhere here. Then we might see wave 4 and wave 5. I would be looking for this particular target. This is the most typical one for the impulse. Well, that's the perspective. Let's switch back to this bigger target and let's have a look at the other charts. So this is the one that we were discussing for a while, since December. Now what we are seeing here is that the flag potentially complete, and now we are already approaching the minimum flag target. But I would like to say this is the minimum one. The bigger one is here between 60 and 53. Today is April the 3rd, and this is the chart to watch. Now if we look at another technical aspect which we discussed 2 weeks ago, this is MACD bearish cross on the 4 months frame, and today it is crossing the line. It's already moved and the cross is ready. So even though we still need to wait for 27 days and 6 hours until this 4 months frame closes and the cross officially reversed, well, the reversal of it wouldn't be as easy as flipping it bearish at this point. Well, and if this is a case, then our targets would be somewhere here between 50 and 30. That's the perspective. This is statistical analysis that we posted on our website. And if you are interested in details, you can have a look at daily and weekly reports that we post for oil. Well, let's now move on to the next one, and next one would be silver. What silver is doing is pretty brutal. We discussed for a couple of days that these candle formations are not bullish, and the chances for a completion of a reversal is fairly high, and this is what is happening right now. So I can see that silver possibly formed a double top, very nice one, and now if it closes today like this, it will be a confirmation below the neckline. The next target would be this one, this line, approximately 31, and the next target for a double distance would be 29.7 to about 30. That's a very rough estimate at this point. Speaking about the bigger frame, this is potential for the 3-day closure, and it is so far on track for a very serious bearish move. And everything started with this move. I'd like to remind that silver went above Bollinger Bands, and this was not a healthy sign. And I said 3 weeks ago that in 75% of the moves, we would see a bearish rejection, and this is what is happening. So last week, silver tried to reject the red candle unsuccessfully, and now we are seeing the implications. That's the perspective, and now let's have a look at the smaller chart. The chart is not extremely clear, I would say, because first of all, the first wave, it could be a diagonal, an expanding leading diagonal, which I marked with wave 1, or it could be a wave A, and then we have a wave B, and now we are looking for wave C of a bigger ABC rejection structure. However, either of them, they have valid points, and now the most important one is that this particular expanding ending diagonal, this is something that probably triggered this strong wave down, and the wave so far is clearly impulsive. I think that this is 1, 2, 3, 4, 5 here. This would be either wave 3 or another possibility here for wave C. I would say this would be alternative C, which we might be looking for. If this wave closes here, then it forms wave 4 and makes another lower low. I would be looking for a bigger impulse here. Well, that's the perspective for silver short term. And if we look at silver SLV ETF, the candle today is bearish technically, because yesterday I said that closure below 30.48 would be a bearish confirmation, and it's not only confirming it, but it's also breaking below the 50 days moving average. 3-day closure today would be confirmation of a double top. Technically, this would be the neckline. This would be the neckline here, and I would say that the first target for a double top is already done, but the chances to moving lower are significant. And the weekly frame, if it closes like this, it might be a very strong reversal, but we have to wait for another day and a half. Yesterday I posted late night a very detailed chart for the midterm projection for SLV ETF. It is available on our website. If you're interested, you can have a look at it there. Now let's move on to gold and see what gold is telling us. So first of all, I'd like to say that the wave down, Elliott Wave projection. Elliott Wave down is impulsive. This is a clear impulse, and now we are seeing a potential bounce for wave 2. Well, wave 2 could be extended. Could be something like this, for example, and after that we will see it move down. However, it's not necessary. This wave 2 could be a very sharp one, and we might see wave 3 the next. What I'm seeing here is that wave that started in March, at the end of March 21st. What is happening is that wave is not entirely impulsive. First of all, this wave, the first wave, is clearly a corrective one. And after that, we have a very complex and somewhat unusual wave 3 with very many overlaps and difficulties. And the last one is clearly corrective too. So I would say that this is a possibility for an ending diagonal, non-overlapping diagonal. If this is the case, then a clear return to 3000, it should be in the cards. Once we hit this level, we will discuss another one, another potential. Let's see how this impulse, potential impulse, unfolds. Speaking about the candles, candle today, daily candle has a very good chance to form a bearish engulfing. So far, it is on track, but let's see how it closes. We might see an extended battle here before a very strong bearish move happens. And if we look at the GOD trust, so far this candle is somewhat neutral, and we need a lower closure in order to confirm this potential reversal. Nothing is confirmed yet for gold, and for 3-day frame, it is a potential hammer or hanging man, but it would require a confirmation unless it unless it transforms into a bearish engulfing in the next couple of hours, which is highly unlikely at this moment. So that's silver and gold, precious metals. Now let's have a look at copper. Yesterday I discussed this potential setup that copper might be up to something big if it closes the week below this line and makes a break below this line. So this is exactly what's happening right now, and I would say that this break already kind of invalidated the impulse upward, and right now Elliott waves are in a bearish mood. Now all we need to see is a strong tower top or bearish engulfing on the weekly frame, and the copper will be ready for a move down. These are the targets. If this is everything confirmed on Friday, these would be the targets. As I said yesterday, this would be the best case 3.13 and the worst case scenario 1.93. That's the very strong targets at this moment. Well, that's all I wanted to say for today. And just to wrap it up, from oil's drop to natural gas surge. By the way, we didn't cover natural gas today. It is still developing, and I will talk about it in our daily waves update. The precious metals nearing another critical breakdown. Today's commodity moves weren't just noise, they were confirmation. Copper setup could be the sleeper signal, and if the structure holds, the next leg might surprise many. But not us. What's your game plan? Are you positioned for a continuation or reversal? Let us know in the comments. Let's compare setups. If this helped you stay ahead of the curve, hit like, subscribe, and ring the bell so you never miss a turn. Share this video with your trading crew. Don't let them walk into the next breakdown blind. And for full multi-frame Elliott Wave and candlestick analysis, visit investingangles.com. Until next time, stay sharp, stay objective. And remember, at investing angles, we chart the turn before the herd even flinches.